Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday Market Moves, what happened last week in the markets, and what we expect for next week. And thank you for allowing us to do work that we find meaningful. Thank you for giving us the most valuable commodity you have, your attention. We promise to do our very best to give you a return on it. All right, let's go to the charts. All right, starting out as always with the S&P 500. Still continues to scream into the clouds here. Close the week above 5,100. We're at 5,137, but that's just a number, right? Don't really see anything that would make this reverse. I mean, I guess other than fundamentals, but nobody pays attention to those. Almost had a double top here on Thursday, blew through it on Friday. Looks like it's going to keep going. I mean, it's just obeying this 10 and 21 moving average right here. So yeah, don't see any downside for that. I mean, technicals have been totally stretched, at least in the daily, since like November, December of last year. All right, and the dollar dropped about a third of 1%, sitting right around the 200-day moving average. We got a bearish reversal bar on Friday. Technicals are kind of middle of the road. But it does look like the dollar's probably going to be forcing down a little bit. We'll see if the 200 moving average holds, but our bias is to the downside on this, probably seeing a piercing again like we had before of the 200-day moving average. All right, and yields have dropped. This is the 2-year yield, fell out of bed on Friday, dropped almost 2%. The 10-year yield dropped 1.6%, was caught only by the 200-day moving average. Here is the yield curve inversion, and this is the 10-year minus the 2-year yield. And so we expect as time goes on, let me zoom out for you guys here. We expect that we will exit clown world and move on to normal times in due time. But we expect that the 10-year yield will start to pay more than the 2-year yield here. I don't know, maybe in the next 6 months or so. We can go to the Fed's website, or I'm sorry, not the Fed's website. We can see what the Fed is forecast to do from our friends at CME Group. And we can see that for the March 20th meeting, 96% of traders believe they're going to pause. Coming into May, we got a few that think they're going to cut, but the majority still think that they're going to continue the pause. And it isn't until June that it starts to stack up. And most traders think that they will cut. So probably June, July is when we're going to see our first rate cut from the Fed. Time will tell. Traders have been wrong now for about 18 months. We'll see what they actually do. And a reminder, 1-month Treasuries still paying north of 5%. So Ray Dalio's saying cash is trash couldn't be more wrong as of now, because right now it is paying over 5%. Nvidia still screaming into the clouds. Let's go to the daily here. We had an interesting little double top up here. Let me remove this drawing so you can see it. And someone last week was asking, would I ever short this? And this was the information we had. So negate these 5 bars to the right. We had this information right here. We said, no, we want to look for some type of double top pattern here. And look at what we got. We have a double top. So it goes right up here to this line where it closed 822. Although it is a bullish bar moving to the upside. So that looks like Nvidia is going to keep moving up. But if we got a pattern on Monday, Tuesday where it starts to fall down, basically what we're looking for is we're looking for this to move up, do a double top, just like it did, and then move down and move below this neckline, this white line that we moved right here. And then you might be able to place a short right around that point, right down there. So we'll see how it works out. I don't even know if we'd short this. I'm not sure how expensive the option would be, but it's something to keep in mind. And it looks like millennials are betting on that AI is going to fix the economy. And I think they're right. We asked ChatGPT to tell us in 20 words or less how the government can fix the economy. And they said, reduce government debt, reform entitlements, incentivize investments, streamline regulations, promote financial literacy. Wouldn't that be nice if they actually taught kids in school how to balance a checkbook? But they will never do that. and to restore solvency in the US economy. And then we asked him to tell us in 5 words or less, and ChatGPT delivered, doing it in 4: reduce debt, reform entitlements. So Prigler, I think you're right. AI is going to fix the economy. Proof is in the pudding right here. And it's also proof when you look at Nvidia and what it's done over time. Nvidia will fix the economy. All right, moving on to gold. This is extremely exciting. We're up 2.3% for the week. Let me just move out to the quarterly chart here. Okay, so this is going back to the 70s, looking amazing. Okay, we'll see what the quarterly close is at the end of this month. Then we move on to the monthly. We had the highest monthly close. We had the highest weekly close, just skated by it right here. Okay, closed the week at 2095. Daily, highest daily close ever, right? I mean, we've got this amazing like quadruple top here. And yeah, it just shot up to the upside. Not a huge amount of weakness in the dollar. I'm not really sure what moved this. If anyone knows, put it in the comments below. But gold is looking amazing. We might be on the cusp of a breakout here. We have an option right now on wheat and precious metals, which is pretty leveraged to this. And we contemplated closing it on Friday, but we didn't. Okay, gold to S&P ratio. So we basically need this. Let me go out to the monthly here and get some history on this. Okay, so this is gold divided by the S&P 500. So how many ounces of gold would it take to buy 1 share of the S&P 500? And right now it takes 0.41 ounces of gold. I'm sorry, 0.41 shares of the S&P 500 to buy 1 ounce of gold. We fully expect this to, at least get to 1. But when you look at this history here, I mean, it's just had some amazing moves. There was one run there and then down and that. And I think we're starting the third one right here. And I think this spot right here is kind of around right there. That's what it looks like to us. When is this finally going to turn and outperform? We've had a little bit of outperformance here in this last week, just starting to tick up. Was that the bottom? I don't know. I hope so. But gold had a great run on this week. GDX, so leveraging that on the major miners with GDX. I don't see any buys right now in gold. It just had a quick run. We need to see if it'll get a close and a consistent close above 2100. But GDX shot up on Friday, almost 4%. GDXJ, same kind of thing, shot up. And remember, GDXJ is a little more leveraged, so this one went up 4.2%. GDX only went up 3.6%. That's kind of what you expect. The junior miners are going to be leveraged to the upside and the downside, but looking great in the miners. Franco, Nevada, we said last week, if you set a limit order for 104 or 105, it'll probably hit. It did. If you got it, congratulations. Now you're in the best gold royalty play on the planet, and you got it at 104. If you're new to this show and you want to get into gold, and probably one of your safest bets other than a physical bet is going to be a royalty play, and it will be this one. Set your limit orders for 104, 105, and it'll probably hit in the next couple of weeks. Wheat and precious metals. This is the one that we placed an option on. Probably should have closed on Friday. We're up 130% at one point when it was above the 400 moving average here. I'm not really sure what more upside I was looking for in an option because it expires beginning of April. But the reason we didn't close it was just looking at the gold chart, looking super bullish. And we think we might have a little bit more upside in this. Maybe we're just getting greedy. We'll find out on Monday. Gold Royalty Corporation, this is probably one of our favorites. We're finally in the green on this thing, just been purchasing back here since around $2 and buying more on the way down. Still have our limit order in for 130, probably a pipe dream, but this chart is looking really good. We are above the 200-day moving average here. Kind of hope this just grinds sideways for a little bit to build up some support. Maybe we can get the 50 moving average to move above the 200, creating a golden cross for the next move. Don't see any buys right now, but maybe anything that retraces down to this 200-day moving average might be a nice limit order. Orogen royalties. Oh my goodness. They just jumped out of bed. This was amazing. Had some great news on this. They've got a 1% royalty on a Nevada mine that is, that's the best mining district on the planet. In Nevada, it's they've got royalties on 2 deposits called Silicon and Merlin, run by Anglo Gold. I believe they're the 6th largest gold miner on the planet. Don't quote me on that. They could be the 4th, but somewhere in that range. And they're developing these. They're drilling them out, aggressively drilling. They did $74 million worth of drilling in 2023, and they're not stopping. And these 2 deposits that are being drilled, Orogen has dibs on, and the deposits are only getting bigger. So they have let's see, what was it? It was the Silicon deposit has a 4 million ounce deposit, and then the Merlin has, I think it's 9 million. So they've got a royalty on 13 million ounces. Now they're not going to recover this for years, but just the fact that they have the royalty on that huge deposit increases the value of this royalty company. Their market cap is, I believe, 113 million. And this may still be a deal, but I wouldn't be able to pull the trigger on this just because the technicals look so stretched. I think that a limit order, we had a limit order in for 46. We pulled it. That's probably a pipe dream. But anywhere around 50 cents or so for an entry would make a nice technical entry point. Although it's probably still a deal here up at 59. All right, and one more thing. This company, okay, so they're worth 113 million. They have 17 million in cash, so that's really good. They have a producing asset with First Majestic. We talked about that last week. Their Ermitaño project. They got a strong balance sheet. They've got cash flow, and that producing asset will be producing for the next 5 years or so. So we like this one a lot. We don't like it as much as Gold Royalty, but it's a close second as far as a new royalty play. All right, and Sandstorm. Let's see, Tube wants to know about Sandstorm. We were in Sandstorm back here in September of last year, and then we sold it for a small profit. If this was down at the time, we would have sold it as well. We talked with Rick. I think this was the day after we interviewed Rick, and he, without going into too much details, you guys can go back and listen to the episode, but we ended up getting out. If there is an entry in this, it was going to be had last week on Wednesday. See this double bottom that formed, and then the reason this shot up so much is because gold went up so much. I don't see any entries in this right now, but this is another royalty play that you could play. They do pay a dividend, not a huge one, but they started paying a dividend a couple years ago, and that's something to be notable of. And STP wants to know about Triple Flag Precious Metals, another royalty play, relatively new, started back in 2021, kind of like Empress. As far as an entry point on this, same kind of thing. It was to be had last week on Monday. See how I'll zoom in here. See how we get this reversal bar right here on Monday. It goes up, shoots up to the upside. That would have been the entry point. Have a nice little run. I don't see any entry points right now, but maybe a limit order around 12.25, or then down here around $12 or a little south of it. Looks like it came down for the dividend, and then now it's repricing. So there is Triple Flag Precious Metals for you there, STP. If you guys are liking this and you're enjoying the show, you can donate through the link below, or do a super through YouTube. And thank you to all who have donated. All right, moving on to Barrick. This one would have been a nice one for an option. We just had a limit order that hit down here for $14. Looking really good on Barrick. We like it. Maybe a buy around 14.50 or so, somewhere in this price range, and then a stink bid again down around $14. We think this company will do really well in the gold bull market. Also, another favorite is Newmont. They I think a limit order buy around $30. That's where our last one hit. I think this company is going to do very well during the gold bull market. It's simply, when is this going to turn? But I mean, look at some of these returns here, like, you know, the dot-com bubble to up here in like '06. I mean, just a monumental move. If you only hung on there for maybe 3 or 4 years, you got almost 250%. If you held on a little longer, over 300. We got some monumental moves in these major miners. I think that Newmont will benefit a lot. Agnico Eagle, same thing. We're looking for these parabolic moves when gold finally consistently goes above 2,100, which we fully expect it will do in 2024. And yeah, excited for these three, part of the core portfolio in gold. And G Mining Ventures. Okay, so we learned this one from the Rick Rule Bootcamp, and starting to kind of even out a little bit here. There's a project down in Brazil. They're still developing, probably go into production in the next year or so. Got to give a shout out to Jordan Royburn too at the Daily Gold. These two arrows right here were from Jordan's newsletter. And then this was Rick Rule's Bootcamp, where we essentially doubled our bet. We doubled down. So super happy with G Mining Ventures. We think that this is going to be a developer that will pay off. They're actually going to do it. They've built 2 mines like this before in high altitude, tropical rain sodden country, and they're doing it again for the 3rd time here, and we believe they will be successful, and so far the market does as well. All right, and moving on to silver, up 1.75% for the week, tapping right on the 200-day moving average here. Let me move out to the monthly and we'll get a bigger time scale here. So these 2 lines right here, basically $22 and $26, just kind of trading in this range here for the last like over a year. And we were on the downside of that just a couple weeks ago. Here's the weekly. It's still under the 200 weekly, and the daily still under the 200 daily. But most of our silver bets were placed back here in mid-February when it was touching on 22. We were hoping that it would get down to 21 or 20. It did not, but that's okay. We got our bets in back here, shooting up to the upside, probably following gold. We just need this to break above the 200 moving average, and that will be a new line of support, which is around 23.50. Close the week at 23.36. All right, SILJ. We're kind of enjoying these options. We used to do options a lot more, and we're going to start doing more of them. Like the kind of short duration option that, when you get down on these way oversold levels, you can have some really major moves. I mean, if you were to do an option right back here, it went up 15%. But if you held an option that was maybe dated for, I don't know, 3 months or so, that's going to be over 100% move. And that's what we're hoping for here on SILJ, a leverage bet to silver, is we're hoping for a move of up of, 10, 12, 15%, and then we can get out of the option. Just creates a little cash flow, kind of keeps our monkey mind busy in the process. And copper is up 4% for the week, looking pretty good. It's above the 200-day moving average, just kind of resting right on the 50 for the week. Looking pretty good in copper, and the way we're placing our copper bets here for Dr. Copper is on COPX, just an ETF on copper. It's got all the majors in there. Placed a bet on copper about, 3 weeks ago or so on COPX, hitting right under the 200-day moving average, above the 50. Just need this to break through. Our bias is towards the upside for next week for COPX. Same thing with COPJ, just under the 200 moving average, although this one isn't quite as good just because we don't have much history. This ETF was formed about a year ago, so not a whole lot of history on this. But if copper is going to do well, then COPJ is going to do really well. And so this is a very leveraged bet on copper. Arizona Metals, still down, but looks like we're kind of getting into like what is hopefully going to be a double bottom here. If it hits 122, 10 cents down from where it is now, that looks like it's going to be a pretty good double bottom. We'll want to see like a reversal bar like this one moving up to the upside. Technicals are kind of middle of the road, so would like to see this come back down to like 122, and then we might make an entry there. All right, and Agenda wants to know about Ivanhoe Mines. Okay, so this is copper, zinc, nickel, and PGM metals, platinum and palladium, out of the DRC, Dominican Republic of Congo, out of Africa. Don't see a whole lot of entries here. Technicals are kind of getting a little stretched here in the daily. Let me start off in the monthly here. Okay, so monthly, kind of high. Weekly, kind of high, but a bullish looking chart. All these moving averages are now in sequential order. Daily, still a pretty bullish looking chart. All the moving averages are in sequential order. We got a golden cross back here, and like history dictates, it usually moves up. But the technicals are pretty stretched in the daily. It looks like we might be hitting on, let me move out just a little bit more. Yeah, our bias is to the downside here, just from the technicals. I can't speak to the fundamentals on this, but yeah, I don't really see any entries. I'd like to see some of this get sold off, get a little bit oversold. Maybe it'll start hit. The first line of support here is around 14 bucks or so, but I would wait for this to sell off just a little bit before making an entry. All right, and uranium. The month end smash, we're down to $94 spot. If John Quakes is right, then traders are taking profits here. They're selling off, and it's going to reverse and go up in March, which is really what we're hoping for and literally betting on. We placed a bet on SRUUF, and we picked it up. What price did we get it at? $20.30. And then on Thursday, we're right here. We were down around 1980 or so, and we were about to buy, and then Daniel called me, and I was on the phone, and by the time I got off the phone, I looked, and it was above 20 bucks, and we just didn't take it. But technicals are getting stretched right here, and if uranium Twitter is correct, this should reverse and go up on in March over the next month. Okay, Kazatomprom coming near the 200-day moving average. Would like to see this kind of correct back down and maybe use this 200 moving average as support. Oh, I'm sorry, Cameco. That was Cameco. This is Kazatomprom. I did that last week too. Okay, this one's kind of coming into a double bottom here. So this is kind of interesting. If you don't have any position in Kazatomprom, you know, they pull the most uranium out of the ground on the planet. And we're coming into a double bottom. We are quite a ways from the 200 moving average. Technicals are, I mean, they're getting down there. RSI is at like 37, you know, 30 is kind of the idiot light. So maybe just a little bit more selling. Would like to see this grind sideways a little bit, and then that might create an entry point. But this company has great dividends. Like it a lot. URA, kind of the same pattern here. See a little bit of a double bottom. Okay, same with URNM. Kind of the same pattern, a little bit of a double bottom here. Still a ways away from the 200 moving average, but the technicals are getting kind of stretched, and we want to see this purple line cross above the this yellow line here. This is like the 14 moving average of this, and then this is kind of the instant one. So once it moves above that yellow line, that's a bit of a green light, but still got quite a bit of resistance above it. You know, if we're moving into a liquidity crisis, I think these uranium stocks are going to get hit, but I don't think that the physical metal itself will, because, you know, when you're, let's say you lose your job, you're in a recession, what are the things that you're still going to find a way to pay for and buy, regardless of what the economy is going to do? You're still going to buy water, you're still going to buy food, and you're still going to buy electricity, because without electricity, people die. With base load electricity, these utilities do not care how much uranium costs, they're going to buy it regardless. And you can literally buy that fuel before they do with this fund. We do not think that this will get hit by a recession at all. Maybe a little dip, but nothing compared to what equities will do or what Nvidia is going to do. All right, URNJ, the junior uranium miners ETF through spot. Love this one a lot. If it got back down here to maybe like 23, we might even make another purchase. We didn't think we'd be buying any more uranium, but we just proved that last week with buying SRUUF. We might buy some more URNJ. We'll see. UROY, we actually placed an option on this, probably a little bit too early, but we got it in here. We basically need UROY, and all we were looking at here was see the 200 moving average. We've got this general up channel trend line right here that it hit on. We've got the 400 below it right here. Like this one a lot. As far as this last purchase right here, we have a stop loss at, I think, like $2.40, something like that, a little bit below this tick up here, but leverage bet on uranium. UEC shot up on Friday, over 7% on Friday, looking really good. Same kind of pattern, this double bottom here. You know, I suppose that was a tick if you could catch it. I would like to see it get a little bit more sold off, maybe closer to the 200-day moving average. You know, kind of like we were back here, kind of get a little bit closer to the average. Maybe we'll get it, maybe we won't, but I got to say the technicals are turning up. Look, this little RSI crossed this yellow line, looking pretty bullish for UEC. All right, oil is up 4.5% for the week. Pretty cool. We are above the 200-day moving average. I mean, here, I'll go out to the monthly here. Look, above the 200 on the monthly, above the 200 on the weekly, above the 200 on the daily. This is looking really bullish. Like it a lot. Here's the hourly above the 200. Here's the 30-minute above the 200. Loving oil a lot here. I don't really see any bets on this. I think the time to bet it was back here. But yeah, collect your dividends. XLE, our favorite oil ETF. Love this one a lot. I don't see any entries here. As a matter of fact, it looks like it might be coming up on some resistance to the downside, but we'll see. XOM, ExxonMobil, our favorite oil company on the planet, has hit through both the 400 and the 200 daily, but kind of rested right on it. So it's got a lot. That's a big soap bubble to punch through there. We'll see if they can do it or not. Blackstone Minerals is getting cheap again, maybe a limit order around 15 bucks. That's what we got it at a few weeks ago when they paid the dividend. Amazing dividends, you know, around 10% or so. This thing could go sideways and you make money. Like this one a lot. And Harley Davidson wants to know about DHT. So this is oil tankers, and they are, let's see, they're worth about 1.7 billion. They have sporadic but incredible dividends. Let me show you here. So we'll go to the financials, dividends. Okay, so 5%, 2, 25, 2, 1, 11, right? Pretty incredible dividends, very sporadic. So, you know, you may have to wait a few years to get a big payout like the 25 there. As far as what we see on the charts here, okay, so technicals are kind of middle of the road to a little stretch to the upside. We do have a trend line here, not that it has to obey it, but it generally is. Maybe I'm just drawing a line there. But I would like to see this kind of consolidate a little bit, get a little bit more sold off. I think the next major resistance here is going to be, what is that? Maybe around $10.50, something like that. But I would prefer to see this kind of come back down to the 200 moving average. See, like it did back here, back in December, like it did back here, back in October, you know, kind of get a little bit more sold off, maybe get some support here from the 200 and the 400, but seems to be obeying the 50 moving average for the last couple of months. They are slowly buying back shares, which is good. The fewer shares they have, the ones that you got become a little bit more valuable, so we like that. Nat Gas is down over 10%. We're kind of looking at some options here to play on natural gas, although we haven't found any. But you know, going back to long-term charts on this thing, I mean, this is kind of looking like the platinum chart. I mean, it's just really down in the toilet. We think that natural gas is, you know, it usually doesn't stay down here for very long. So we might have a nice reversal coming up here for natural gas. Two ways we're playing that is Devon and Equitable, and don't see any entry points right now. Maybe if it gets down to this 200 weekly down here around like 41, and we got the 200 daily. Yeah, same kind of thing. We have a limit order back here for $40.80. Just lining up with back support right back here. Maybe it'll hit, maybe it won't. Equitable, we got into this one at 35.13 back in January. We had a limit order. Actually, we still got it for just south of $32, and it missed it by a few cents. I think we got greedy, but don't see any entries into this. Maybe it's forming a little bit of a pennant there. That does kind of look like a bullish pennant. Well, we'll see how it irons out. And TALO. Sergio wants to know about TALO, Talos Energy. I looked up both of these, TALO and Baytex Energy. It looks like both of them are diluting shares, which is usually never good. Usually never good. 60% of the time it's bad every time. Yeah, I don't really see any technical entries into this right now. Technicals are kind of middle of the road to stretch to the upside. Would like to see it come back down. Maybe you get an entry, I don't know, down around $10 or so. There's some decent back support, maybe around 12. Yeah, I don't really see any entries into this one. I mean, this is the long-term chart here. So it's just really just diluted and kind of gone sideways. As far as BTE, Baytex Energy, this one looks a little bit better on the charts, although they are diluting shares. But as far as an entry into this one, we got quite a bit of back support right around like $3. So, you know, if you believe in this company and know something about it, like I do not, maybe a limit order around $3 or so might be, you got a lot of back support there. So might have some support there. Technicals, I think by the time it got down there, RSI would be looking pretty good. All right, and coal. Moving on to coal. Okay, so this is thermal coal, shot up, closed the week at 136. We're looking for an entry of around 120 or so, coming in maybe mid-March. And then met coal closed the week at 306, and still waiting for an entry point, probably around June, where hopefully it'll get, if Matt Warder is right, it'll get down around 250. And here is the coal ETF that we are anxiously awaiting on. We're hoping that this just forms out maybe like a cup pattern or something, but we just got to get more volume buying into this. I mean, here on Friday, we only had 1,700 shares trade places, and this thing is only $23. So we need a lot more volume to come into this ETF, and when it does, and when we get more price action to follow for some kind of pattern, we will be placing a bet on it. Glencore, we had a limit order hit down here. We placed it for $9.50. It hit at $9.42, so that was cool. We have one more limit order down here for, I think, $9. Oh no, $8.56. So we just got into the weeds here looking for back support back there. Don't know if that'll hit or not, but we like Glencore a lot. We think the dividends are going to take a hit over the next year or year and a half, but once their acquisition from Tech starts, well, it'll be cash flowing, but once it starts producing actual income here and paying for itself, we think Glencore will do very, very well. All right, Bitcoin is up to 62,000. We have no idea why. If anyone does, put it in the comments below. And Platinum's kind of forming out a base rate here, kind of right around $900. There's a lot of back support where it is. But if Rick's right and Russia is de-hoarding their platinum and palladium, this should get cheaper. Maybe we'll see this thing around, $700 an ounce. I have no idea. But don't really see any entries into this as of right now, although that is a pretty enticing reversal bar there. We'd like to see a little bit better fundamentals on platinum before we start placing bets there. Palladium, same kind of thing. This chart is a little more noisy and less clear than the platinum chart. But I mean, if we go historically here, platinum and palladium over the long run, I mean, you can see that we are at historical cheap levels in comparison to gold. 0.44 of these two combined and divided by 2 if 1 ounce of both of these is less than half an ounce of gold. So extremely cheap, and we can see it has these parabolic moves that we're really excited about. And the way you can easily play this is the SPPP with Sprott, the Sprott Physical Platinum and Palladium Trust. BHP might be carving out a little bit of a bottom here. It did break through the 200 moving average and through the Fibonacci retracement. DeWaldebear said in the comments last week, we're wondering why this has not held. And he said the CEO of BHP said that their nickel segment may have to go into care and maintenance because of the cheap Indonesian coal that cheap Indonesian nickel that Rick Rule was talking about. So if they're not going to be producing nickel because Indonesia can do it so much cheaper, then they'll put that under care and maintenance, and we got to wait for nickel to reverse. We might actually pull our nickel bet. We're down quite a bit on that. We kind of ignored our own 20% stop loss, and maybe that was a mistake. But anyways, that's probably why BHP sold off. I'd be looking for some back support right around here, around like $54, $55 might be a really nice entry point, and they pay great dividends. Although the dividends have slashed, so maybe not quite as good as they were. Looking for an entry still in Rio Tinto, broke through the 200 moving average and the retracement. I'll draw it here for you guys. There we go. Okay, broke through the retracement as well. Would have been ideal if it just bounced along the bottom side of this retracement and the 200 moving average, but it broke through both of those, so that's a moot point. But there is a fair amount of back support right here, but really I think the level we're going to be hoping to get it at is $60. So hopefully it drops down to there. TLT. All right, we've got it is below the 200 moving average. And nice reversal bar on Friday. I mean, this all depends on what 20-year yields are going to do. Waiting on the Fed to cut. Once the Fed cuts, this should do quite well, and we should iron out a pretty good profit, but we'll see how that goes. And Blaine wants to know about North American natural resources. So this is an ETF. He says, as you ponder the natural resources landscape, how does NANR, the ETF, strike you after the upcoming recession? Well, if we go to their holdings, let me click on here. There we go. All right, so their biggest holding is Exxon. We love that a lot. Second biggest is Chevron. We also like that. Freeport. So we've got some major companies here. Here we got Newmont, which we love. ConocoPhillips, we like that. Nutrien for fertilizer. Barrick Gold, you guys know that one. Just place an option on wheat and precious metals. We obviously like that. Agnico Eagle, Franco-Nevada, Teck. Yeah, if you have a life and you like to fish and go golfing, I think this one's pretty good for you, Blaine. As far as a technical entry into this, I'm going to be looking right around this 47 level, something like that. See, the technicals are getting a little stretched. Let me stretch it out to the monthly here. Okay, weekly. Nice, just above the 200 weekly. That's good. Maybe a retracement to the 200 weekly, which would put us around 47 or so. Daily, yeah, I kind of like around 47. Maybe you place 3 or 4 bets. The first one at 47, the second one down here at like 45.75, and then your stink bid around 44. 44 looks really good. You got a lot of back support right there. Maybe 45. 44, yeah, something like that. They pay nice dividends, probably because they have so many good good holdings, especially in Exxon. Yeah, like this ETF a lot, Blaine. Well done, nice find. I think we brought it up on the show before, but it's starting to kind of enter into a spot now where I think it's going to be good. And after the recession, when you look over those holdings, I mean it's got a lot of holdings that we already have in the portfolio, so I dig it. All right, well, I hope you guys got something out of that. Support the show. Thank you for always being here. Hit the like and subscribe. If you want to sign up for Rick Rule's next boot camp, there is a link down in the pinned comment below. We'll also be going out to Boca Raton in Florida for Rick Rule's symposium. I would love to see you guys out there and meet you face to face. It'll be a lot of fun. If you want to try TradingView out, this software, I'm going to do an episode on how to set it up and basically what buttons to click so you guys can get the same RSI, stochastic, MACD, the same indicators and moving averages, and we can do all this together. It'll be a lot of fun. So thank you for always being here. hit the like and subscribe and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.